So, you're a Canadian and you've got that dream of living abroad. Awesome. But here's the thing, your biggest hurdle might not be learning a new language or figuring out how to pack everything. Nope, it's taxes. In the next few minutes, we're going to break it all down, from what the government thinks your status is, all the way to how you can actually get money back. Let's dive in.
Okay, so you've got the visa sorted, you've even found a cool place to live. But have you really thought about your tax situation back home? For so many Canadians, this is the one thing that catches them completely off guard. And look, getting this wrong can cost you a ton, but getting it right, well, that could literally save you thousands of dollars.
So here's what we're going to cover. First, we'll figure out how to define your status so you know where you stand with the CRA. Then, we'll get into what you actually owe. After that, the fun stuff. How to get refunds when you shop overseas, the deal with that if you're a digital nomad, and finally, how to move all your stuff without paying crazy import fees.
All right, first things first. This is the absolute bedrock of your entire tax situation. How does the Canada Revenue Agency, the CRA, actually see you? Because you know what? It's not really about where you are on a map. It's all about the connections you've left behind in Canada. So the CRA has this term called residential ties. The best way to think about it is like threads that connect you back to Canada. The more of these threads you have, and the stronger they are, the more likely the CRA is going to say, hey, you're still a resident for tax purposes, even if you're living halfway across the world. And the CRA actually breaks these ties into two different groups. First, you've got what they call significant ties. Think of these as the big, thick ropes. We're talking about a home in Canada, a spouse or partner, or any dependents still in the country. If you have even one of these, you're almost definitely going to be considered a resident. Then you have the secondary ties. These are like the thinner threads, things like a Canadian bank account, a driver's license, a passport. They're not as strong on their own, but they definitely help tie you back to Canada in the CRA's eyes. So all these ties lead to one of two outcomes. If you keep those big, significant ties, you're what's called a factual resident. A perfect example is someone working abroad for a year or two, but their family is still back in Canada. On the flip side, if you cut those major ties, you sell your house, you move your family with you, you become a non-resident. And believe me, knowing which one you are is everything because it totally changes what you owe.
Okay, so let's say the CRA considers you a factual resident. What does that actually mean for your wallet? This is where we get into the nitty-gritty of your tax obligations.
Listen to this. This is directly from the Canada Revenue Agency. As a factual resident, your income is taxed as if you never left Canada. Just let that sink in. It means that, as far as your taxes are concerned, it doesn't matter if you're earning your paycheck in London, Tokyo, or Sydney. To the CRA, it's like you're still right here.
So, what does that actually mean in practice? It means you have to report every single dollar you earn from anywhere in the world on your Canadian tax return. You'll pay federal tax, and yep, you'll even pay provincial tax for whichever province you still have ties to. Now, it's not all bad. You might still get things like the GST credit. And here's the really important part. To keep you from being taxed twice, you can usually claim a foreign tax credit for any taxes you've already paid to another country.
Okay, enough about paying taxes. Let's talk about getting some of that money back. We're switching gears to something a little more fun. If you're doing any shopping in Europe or other places with a value-added tax, or VAT, you could be leaving a serious amount of cash behind. I mean, just look at these numbers. The VAT in some European Union countries can be as high as 27%. That's huge. And here's the thing. As a visitor, you're not actually supposed to pay that tax on stuff you're taking home with you. That is a big refund just waiting for you to claim it. And honestly, the process is pretty simple. Step 1, when you're buying something, just ask the store for the VAT refund paperwork. Step 2, at the airport, and this is key, before you check your luggage, find the customs office and show them your new stuff. Step 3, get that all-important stamp on your forms. And step 4, take those stamped forms to a refund desk right there at the airport or mail them in. That's it. You get your money back. Okay, let's tackle a really modern problem. What happens if you're a digital nomad? You know, you're selling your services to clients all over the world from your laptop. Who do you charge tax for and where? There is one golden rule you have to burn into your memory. VAT follows your client, not you. I'll say it again. It follows your client. So it doesn't matter if you're working from a beach in Thailand. If your client is in Germany, you have to play by Germany's VAT rules.
And as you can see here, a lot of places have specific sales thresholds you need to watch out for. Take Canada, for example. The moment you sell more than 30,000 Canadian dollars worth of services to customers in Canada, you have to register for and start collecting GST/HST. The European Union has a pretty slick system called the One-Stop Shop, or OSS, which basically lets you file one single return for all your sales across the entire EU. Super helpful.
All right, our last topic today is a huge one, especially if you're planning a permanent move. How in the world do you get all of your personal stuff, your furniture, your car, everything, into a new country without getting slapped with a giant tax bill?
The magic words here are Transfer of Residency Relief, or TOR for short. Seriously, you should think of this as a golden ticket. It's a special customs procedure that lets you bring your personal belongings and household goods into a new country, like the UK for example, completely free of customs duty and import VAT. Now, of course, there are some rules. You have to prove you're actually moving your main home. You need to have lived outside the new country for at least 12 months straight. And you have to have owned and used your stuff for at least 6 months before the move. This is basically to stop people from trying to use the system to import a bunch of brand new things tax-free. So why should you care about all this paperwork? Well, just look at this example. Let's say you want to bring your $50,000 car with you to the UK. Normally, that would cost you over $15,000 in duties and VAT. But with an approved TOR, that cost drops to zero. A big fat zero. The savings here can be absolutely life-changing, which makes this one piece of paperwork you just can't skip. So there you have it. From figuring out your residency status with the CRA, all the way to getting a tax refund on a new watch you bought in Paris. Yeah, the rules are complicated, but they're not impossible. The bottom line is this: if you're going to live a global life, you absolutely need a global financial strategy. So the only question left to ask is yours ready?